What is the future of the real estate market and the mortgage market in Canada? This is a recent article that came out, and I want to talk about this. This is really interesting and important. So, the article is Canada's banking regulator wants big banks to take smart risks. If you're kind of in tune with the real estate industry and the mortgage market, you know that getting a mortgage nowadays is a lot more difficult than how it used to be. If we rewind the clock back to say the 2007, 2008, kind of in around there, 2006, it was much easier to get a mortgage. Now it's a lot more difficult. People obviously are still getting mortgages, but the level of checks and due diligence that banks do now is much higher than what was being done before. But I want to talk about this because it came in, and there's a few different things that I want to kind of touch on in this article. So basically, I'm just going to read a little bit and then give you my 2 cents on it. So basically it says, so Canada's banking regulator wants the country's biggest financial institutions to take smart risks to expand their lending and is open to adjustments in its capital rules to accommodate the goal. We want them to take smart risks. Peter Rutledge, the head of the Office of the Superintendent of Financial Institutions. So that's OSFI, right? Um, so further, it goes on to say, and we're open to conversations about how assessing those smart risks might need to change through our capital requirements or our liquidity requirements. Further, it goes on to say, Canada's top 6 banks, which control roughly 90% of the market, are among the most resilient banks in the world, supported by OSFI's strict requirements. So this is where it gets interesting. OSFI's strict requirements for reserves to shield them from loan defaults. Right? Goes on, talks about the big 6 banks. So known as the Big Six: Royal Bank, TD, Bank of Montreal, Bank of Nova Scotia, CIBC, and National Bank hold excess capital of about 70 billion combined, according to Router's calculations, after meeting the 11.5% requirements. OSFI is expected in November to adjust capital requirements for certain commercial loans that would change how banks lend to businesses, potentially unlocking up to 1 trillion in additional loans. So what does this mean? Let's read further. Let's find out. Rutledge noted that the banks made roughly 60% of their loans to businesses and 40% to households in the 1980s. So this is very, very important. So 60% of the loans were going towards businesses and 40% were going to households, so mortgages, in the 1980s. But that trend has reversed. The ratio is roughly about 73% to 27% in favor of mortgages, typically a low risk loan compared with commercial loans. He now wants banks to pivot more towards commercial loans. So this is very, very interesting. So I'll read a little bit further and then I'll give you like my 2 cents in my analysis on this. What we're saying to the industry is, are there some adjustments we can make that might make certain forms of lending more attractive to you? He said, adding that constituents had said that regulators was too conservative. Canada is holding talks with the US on a new economic and security relationship and has announced an increase in military and defense spending, right? Okay, so it goes on. Let's see if we want to touch on a little bit more. But no. So what I want to talk about here is there was some analysis in the media that was talking about OSFI's kind of change with regards to regulation. And what they're starting to do is they're starting to have more of a hand, they're giving more direction on the amount of loan exceptions that occur within banks. So if whether you know or you don't know, there's traditional bank lending guidelines, right? If somebody's income and credit meet a certain threshold, you fall into one bucket. But if your income and credit kind of fall into a different threshold, you fall into a different bucket. What OSFI is starting to do now is they're starting to put different regulations around the credit granting exceptions. So basically meaning that they're going to start to influence the amount of mortgages that are getting approved from banks. So this is really interesting and important news, because what this means kind of coming down the pipeline is, if you're somebody who was a real estate investor, or if you want to be a real estate investor, or if you're just somebody who's getting a mortgage, as time goes on, OSFI is clearly changing the game, and going to be making getting mortgages more difficult as time goes on. And we've seen the numbers, we've seen the statistics. Whereas in Canada prior, more percentage, more emphasis was put towards business and commercial loans, where lesser money was allocated towards mortgages. Now things have flipped, and most of the allocation within the big six banks is going towards mortgages, with far less towards commercial mortgages. So it's going to be interesting, because as we move forward, if these changes stay in place, which they look like they're going to, we're going to see less funding towards residential mortgages, more funding towards businesses. So it's just a heads up, for anyone who's, thinking about getting into the market. If you're on the sidelines, you're wondering, where things are going. Should you wait? Is now a good time? Or should you buy now? When you have data like this and information like this, it makes the picture more clear to you, or to me at least, because you see that in the future, as we go down, it's going to be harder to get mortgages. We're not going to enter into an environment where in the past, an individual, if they had their own down payment, you could get up to 10 mortgages in your own personal name as long as you had the down payment. Scotiabank back in, when was it, 2007, was going to do a 50-year amortization, right? Those days are long gone. So what do the days in the future look like? The days in the future clearly look like policy within Canada is moving towards more commercial loans, more business loans, less allocation towards residential loans. So it's going to be very interesting. That's about it. If you have any questions, feel free to reach out. I hope you found this helpful. Okay, we'll see you in the next video. Take care.